Thank you very much, and we'll come back over to Rich Nelson here for some livestock comments as well. So whenever you're ready, Rich.
As far as livestock, just a few quick charts. Two ones here for the pork end, and actually, even though I'm talking about pork, I do have this leg quarter stock chart put up here again. Put all the bars in black. This is an ugly color because we've got this massive problem with all these dark meat chicken stocks here in the U.S., and that is weighing in on the pork end. So one thing we talked about, though, just before I left was that new cold storage report, which showed actually for the first time we actually did drop stocks significantly. And that was back in June. Last week we got in some great news adding on top of that. Russia approved 39 more U.S. poultry plants, chicken plants, for sending them products. So that's a great news, and it looks like we do have this trend. This may develop a trend now where we'll have a few more months of lower stock levels. So we're getting rid of this chicken, which is the key issue that we've talked about holding this pork back here. As far as pricing, we want to point out that for the past 2 weeks or so, we've had a sharp increase in this is wholesale pork prices. So certainly a good deal on this end here. As far as our outlooks and things like that, we had said we thought 80 to 83 might be a recent good range for that August hog contract, and anything 83 and above might be a recent decent selling area, certainly for hedges and long-term traders. For our short-term positions, we have been trading this from an option standpoint. We sold an $80 put. That's going to expire worthless here in a couple weeks. The other one we did have on was we actually sold a $78 call. We sold it for $225. That risk on that with today's move was filled at $360. So we will point out we did lose about a buck and a 40, about $1.40 or so, $1.35 on this trade, but we're making a little more on that $80 put, which will expire worthless here. So we're going to still stay with this mindset that overall hog prices are at the high end of the spectrum for right now. Hedgers should still be very active right now in getting hedges applied through the end of this year here for that, as far as that goes. As far as short-term trading, we're not going to stand in front of this market just yet. I think we may have another day or two left of this hog rally before we peak out here. Over on the cattle side, just simply point out one little chart here, and this is the cash cattle chart here with the green bars showing we did drop in last week's cash cattle trading. That ended 1, 2, 3 weeks of solid rally here. So it looks like we do have this cash cattle bull market is done right now. Futures are right now saying we're going to drop down to 92 for cash cattle pricing by the end of this month. So the market is saying we've got lower prices coming. In the big picture, though, I want to point out, look at the seasonal trend right here. Seasonal trend right here shows July and August, the time where we bottom out in cash cattle. So I think that exact same type of situation will lay out here. Maybe move down to 90, 91 or so for cash cattle. But the seasonal trend does show an increase going into fall. I think that's still going to happen here. One thing I'm looking at here is look at this October contract. It's saying $95 cash. We were just there last week, and the seasonal trend should show at higher prices. So we're actually still longer-term bulls on live cattle futures, both October as well as December. We'll work on maybe some bull spreads here, getting reapplied on the long side here next couple weeks here.